Hey traders, it's Ryan from theprivatebanker.com. Just going to do a recap for crude oil here and touch base on the S&P 500 also. So I've seen a little change, not a little change, but just not what I was expecting with crude. I mean, the way the market was trading and what we were seeing, I was potentially looking for a possible break higher. I mean, we came in and we tested pretty much the year's high almost. I mean, this year's high was around 55.10, and we came in and we were sort of testing the 54.20 area multiple times, and we tested it three times here. I mean, this low here was also pretty important. This 53.70, and eventually we didn't find any offer above that, and we came back in for a mean reversion on the year. But the way things were looking, it did look like we were going to possibly see at least a test higher to see if there was any buyers here or not. But I mean, we basically just rolled back over and just fell back into the current bracket. I mean, I did say at the time, I mean, I don't really want to predict stuff. I mean, I'm not really a predictive guy. I mean, I'm more of a reactionist. I mean, once the market has given me some good market generated information, and we kind of go from there. And I mean, until we break this range, then I'll sell the highs and I'll buy the lows until we see that directional breakout. But yeah, so we've seen some interesting changes here. I mean, the week we was sort of seeing this one time frame on the week, and we opened up at the low of last week, and we auctioned down sort of overnight, and there was a potential for this to stay with the one time frame and again auction back up and clean this these poor highs up now at this sort of at this support, this sort of $54 a barrel. But in the market sort of had other hand. I had a new objective, sorry, and we basically broken that one time frame on the weekly now. But if we do look, I mean, we are basically still trading in this engulfing bar. The market was one time framing down, I think, for 18-20 weeks, and we finally see that one time frame in stop, and we're seeing this sort of macro rebalance coming to the market now, and but we are still trading in that large engulfing bar from that breakout. So I mean, very, very important references is this sort of 46.70 and this 54.30 high. And again, we've seen now 2, possibly 3 weeks of inside trade inside this previous range. So until we sort of break and find some directional conviction below or above this, then again the market is just expected rotational. But with the one time frame that we were seeing, I mean, the trouble is we wasn't really making highs. So I mean, we started to see potential one time frame down, but that's all got cut out with some sort of micro stop run here. But again, we're just seeing two-way trade here. So I mean, the theme for this week is bearish. I mean, we started off, we're seeing an outside week. We're holding below that 80, that 49.82, I believe it is, the low from last week. So we're seeing almost price expiration from last week. So again, so we could possibly see rotations back down to this sort of $47 a barrel area. Just have to see what happens here. I mean, I know that I think last week the API and the inventory report came out very bearish. I mean, we came out with I think the highest inventory since 2008, or almost in the last 5 years or something. I mean, I don't really trade off of these figures, but I mean, it's good to sort of know what's going on. So but the market rallied off of that information, which is typical. I mean, the market's probably priced in, then just rallied, and now we're sort of seeing the effects of that from last week, and with the bearish week, and then obviously we have the inventory report tomorrow. So I'm not going to go into that again, but it'd be interesting to see the reaction here. I mean, at the moment the theme for the week is bearish, so until we see responsive buyer here and auction reversal, I mean, the current auction on this week is to the sell side. So it's just something to think about moving forward. So I mean, we've only got 3 days left of this month, and at the moment, I mean, we're still one time framing down on the month. We couldn't break that previous high, that 55.08, which is obviously this year's current high, and we're still finding sort of sellers two-way trade off of this support. So at the moment, I mean, if you think about it from a longer time frame perspective, there are accumulation. There is buy side accumulation here. Obviously, there is two-way trade, so there's buy side and there's sell side inventory in the market. But I mean, there has clearly been buyers present here. I mean, we came back in and we've seen that lower balance, and this month we have actually created higher value, which was the first time we've actually had higher value quite a few months now. And again, we just held an inside month, and if we do look at this, I mean, what we've basically done is just filled in volume here. I mean, so now if we put this in, we have a nice distribution bell curve, and we have no real excess at the bottom. I mean, this could change quickly, but if we think about it logically, the trend is still down. I mean, we have a potential bottom in place. I mean, if we look at the current market structure, we have a potential bottom in place, but I mean, this is just another stage in the higher time frame auction process. I mean, we had that lower balance, now we see this upper balance, so now we could potentially come back in and see a lower balance before we see either new lows or we see just a stop run of the current buy side inventory before we actually see that auction reversal and trend change. I mean, just be interesting. It is interesting to see these different stages develop, and we had that lower balance, this upper balance now. So again, like I said, until we break away from this, I think 16 to 18 day balancing range now, then obviously you just want to sell the highs and you want to buy the lows, and go from there. So if we look at the dollar, I mean, the dollar's looking kind of toppy at the moment. I mean, I think we're overdue like a pullback here on the dollar. Have to see. I mean, we are in a very strong uptrend at the minute. I'm not saying that we're seeing a reversal here, but we are definitely seeing some consolidation here, and we're sort of waiting for that, either that next sort of break higher or a pullback to find some higher time frame buyers. And so we just have to again sort of see how that plays out. But in regards to today, we opened up. I mean, yesterday we had we basically, I'll quickly bring the daily charts over. So yesterday, the week start, we opened gap down. We opened with quite a large gap down. I mean, this is where we were trading last on Friday. So Friday's low was 50.75, and we opened at 48.80. So I mean, that's quite a large gap down. And we opened gap down. I mean, if we opened gap down all the way down here, then we maybe could have gone with the gap and looked to the sell side. But I mean, we opened up inside of the bracket and at the low. So I mean, generally what we start to see here is off the open we see shorts covering. So any shorts that are short here, they're going to start. These are interesting prices for them to start to cover some of the inventory. So I mean, again, we see an open drive off the open, and we start to see this B-shaped profile P-shaped profile unfold. So again, short liquidation. So anybody short is coming in, they're buying, and obviously with the short liquidation, we see that nice spike to complete the sort of auction process. And I mean, what happened here again was probably a large build-up of short side inventory trying to go with the gap and go with the imbalance on the week. And basically, we just see. It was a very, very weird spike. I mean, within 5-10 minutes, I mean, we see almost 130 cent higher, lower, higher. I mean, there's some pretty wild rotations happening in J period here. But initially, I think it was just clearing out some inventory. So I mean, we had these sort of weak sellers coming into the market, and they basically just got squeezed out of the market here. And obviously, some higher time frame participants benefited from their stops, because their stops, obviously, if they're selling, then when their stops get hit, it creates a trigger of liquidity to the buy side, which moves price higher. And then obviously the big guys are sitting there absorbing all of their stops by selling at a better price, and that's all getting targets filled on the day. So that's just generally how these inventory corrections happen from what I've seen and know. So again, we had that short covering yesterday. I mean, we started to see one time framing. We've been one time framing now for 1, 2, 3, 4. Today was the 6th day of one time framing down. So we just see two-way trade. If we do look at the value from yesterday, I mean, we had that developing value overnight, and we came back in with a two-way trade, and we just literally went from one side of the 1.5 standard deviation, and then that stop run, that spike went to the other side of the 1.5 standard deviation. So I mean, I was leaning to the long side on this day and looking for a sort of gap fill, and this just happened to work out very nice. I mean, you can see these are 15-minute bars, so in 15 minutes we went up, down, but from a even micro perspective, I mean, we did see this big 130 cent blast higher, and it bounced back down, went back up and down. It was it was very, very volatile and very fast. I mean, it probably caused a lot of confusion and pain for quite a majority of traders. So anyway, we came in today and we opened in that K spike, and we basically just what it looks like is today we just filled in some decent volume here, and we've got a nice complete distribution now for a 2-day balance. I mean, today was a complete inside day, so in whatever way we break from this trade will most likely be the direction for the day. So that's something to bear in mind. Obviously, if we open higher, then we're going to break that one time frame, and we're most likely going to auction back to last week's value. I mean, last week's value low is at 51 even, so interesting to see. I mean, we are still looking rotational on this month. We only have 3 days left, so I mean, we could see that break within the 3 day, and I mean, we have created higher value this month, but again, with when the macro time frames go into this sort of balancing stage, then we see higher, lower value, higher value. I mean, just as that rotational two-way trade comes into the market. So there's no reason why we can't break away from the established value this month and start exploring that naked sort of value from that previous month, and establish again lower value or overlapping value from these two. Just not guessing, just playing it by ear. I mean, we could easily just hold this 1.5 standard deviation, which is the current distribution bell curve extreme for this month, and see rotations back, and we could continue to balance next month. I mean, there's multiple scenarios that could play out. I just have to take things day by day, week by week, and month by month, as I've said before. So, but yeah, I think at the moment the max pain will be to the sell side. So, I mean, obviously we've seen we've seen some macro liquidation off the low here, so we've seen macro short liquidation, we've seen this two-way balancing stage, so we've seen these sort of naive, possibly weak long hands in the market now, and obviously the trend is also down still. I mean, until we sort of really break this cycle and we see some price expiration to the buy side, the trend is still down, and to me this is just the next stage in the downtrend, and but obviously, like I said, things could change, but again, like I said, the max pain does look to the sell side here. I mean, we've got these sort of weak buyers in the market now, and obviously they will get liquidated if we start to break below this sort of $49, $48 a barrel. And again, the current year low at sort of 43.55, there's going to be a ton of stops down there. So again, to play things by ear, but yeah, I think that will cause quite a lot of pain for the majority of people in crude. I mean, most people are coming into crude thinking it's cheap at the moment, and they're accumulating long inventory. So I mean, there's not a lot of people that are going to be smart enough to try sell this now and be the laggers in this downtrend. So it'll be interesting to see how things actually do pan out for crude oil now. But obviously I trade an intraday perspective, but I lean off the higher time frame information. So again, until we see a directional breakout above this $54 a barrel, or a directional breakout below this 48, then I'll just continue to look to buy and sell the highs and lows of this bracket and just trade with the intraday information. But seeing that 50-day moving average caught up with price now, first sort of high time frame reference from that perspective, and again, we have a very, very, very clear distinctive trading range. I mean, you can see these very clear free highs here and these very clear free lows here. So very, very interesting how this market is bracketed very, very cleanly, and again, have to see and wait to see what happens here. So just quickly run through what I was looking at today. So I mean, off of the open, you could have been a seller in this spike, but I just waited. And then on this pullback to the high, I mean, that's where I look to sell. That 1.5 standard deviation extreme, clear reference for my stop. Obviously, stop above the current high, and if we did break that high, then we would have broke the one time frame, and then that would obviously have occurred. And if you look at the weekly, I mean, lined up with this week's current distribution extreme. So I mean, if you see there 50.27, this week's current distribution bell curve extreme, like I said. So just some context there, and I do believe the half standard deviation on the monthly was around 50.25, and obviously 50 is a very psychological number at the minute. There was $100 a barrel, 100 even. There's a major psychological number, and obviously $50 a barrel is its sort of big baby brother, I guess, and a new sort of line in the sand for crude oil. So we came in and obviously looked to the sell side. The market's already I'm looking to the sell side with the 1 time framing, and sat there with quite a lot of sort of two-way chop. I mean, got some sort of scales out, and then finally into the close we see this sort of liquidation breakdown. I mean, there's two things I was kind of looking at. I mean, this line here was this week's last week's low, so the market was just trying to figure out whether we were going to hold an inside week from last week, or we're going to continue to see price expiration. And we can sort of see these weak hand buyers accumulating. Obviously, then they'll get liquidated into the close. I mean, you can see the stops kind of starting to get hit here, and the pros sort of filling their orders off of the retail and weak hand stops here. So very interesting day, and quite predictable in the end. I mean, things could have changed and gone for the worse, but we ended up just seeing a very nice move from the one extreme to the other. So the 1.5 standard deviation to the lower 1.5 standard deviation. So it's quite a nice move to be caught off of that with a continued balanced two-way trade. So that's just what how I approach today. Nothing special. Some pretty cool stuff going on in the S&P at the minute. We're seeing all-time highs. If we do look at this quarter, I mean, I look at the quarterly for the S&P due to the fact that the way the S&P contract rolls, and you can see we started off very rotational, and you can finally see that change, that breakout here, and sort of pegged the meters Vwap from here, and you can see how the market's been referencing the developing value off of this, and every time we hit that 1.5, back to the mean, 1.5, top of value, 1.5, top of value, 1.5. So it'll be interesting to see if we see another sort of pullback to this sort of 21 level, and again to the developing value area high, or we see a change here. I mean, S&P's just been going higher and higher, so I mean, we're finally going to find a stopping price, or we're just going to continue to auction higher, obviously leaning path least resistance to the buy side at the moment until we see that topping process put in. I mean, there was a potential topping process that we are seeing put in the S&P, but again, until we see a decent sort of blow off top, and then we'll continued path least resistances to the buy side. So I'm not going to go into too much detail on the S&P, but you can see we see that huge range off of the year start that was just a balancing range, and we potentially broke out that balance range on this day. We see that gap, and then we sort of saw that 1 time frame, 1 time frame, and this sort of big stop shakeout here, which we broke out of that next sort of balance area. And again, we're starting to 1 time frame higher now. So again, path least resistance is to the buy side, and just go with the order flow that's been coming into that market from that perspective. So today we've sort of formed an interesting ledge here, and we have got a high in the market. So I mean, if we do start to open below this, and we could start to see some volume filled in here, and potentially auction back down and fill some volume in here, some two-way trade, which the pullback would be to that sort of, again, that 2100, 2096 even from that meters. And again, this quarter's developing values all the way back down at 2070. So the 1.5 standard deviations around this 2085. So again, just have to monitor things and see how they go. But very interesting trade on the S&P currently. Anyway, I'll leave it at that. We'll try to do some regular updates again, and wish you all the best of luck, and catch you in the pitch tomorrow. Take care and goodbye.